Hi everyone and welcome to today's morning report. Charter prices on Friday the 7th of April with me, Rich Market Analyst at Handset Markets. It is not our Payrolls Day, however markets are reacting initially overnight to the news that the US has engaged in a cruise missile attack on an airbase in Syria. This airbase was reportedly supposed to be where the Syrian government engaged the chemical weapons attack on the people in earlier this week, and it seems to be that market is taking on a safe haven bid. You've got gold, which is strongly high. You've got the yen, which is stronger. Also, treasury yields, which are also stronger. Let me just show you this treasury yields. Twos on the downside, the 2-year fell, the 10-year fell, but both have bounced since then. Now, this is interesting because you tend to see with geopolitical shocks that the market has a bit of a knee-jerk reaction and then unwinds quite quickly. And could it be that the same is happening again? We've had the initial strong move on gold, for example, $12 up, but is that going to be the limit of the move? And it's already has unwound some of the move initially, but this is clearly an issue that the market is looking out for at the moment, because equity markets are lower, marginally lower across Europe, on the FTSE 100, and the DAX is actually quite strongly about 0.5% lower, but the FTSE is barely lower. So it's interesting that whether this is just a knee-jerk reaction that unwinds quite quickly, whether the markets turn focus towards the non-farm payrolls report this afternoon, and also Donald Trump's meeting with presidency of China. So non-farm payrolls report this afternoon is the main focuses, I think, as the session goes on. Let's get that going there. Not a great deal out other than that. Before that, you've got the UK, which has brought out manufacturing and industrial production. Slight miss actually on all those bits of data, so that's not all that great for the sterling. But main focus will be on the payrolls report this afternoon. All these numbers here. You've got the headline that 180. On the headline payrolls report, unemployment 4.7, average earnings 0.2. That had earlier I had seen that being 0.3, so that's slightly underwhelmed from where it was earlier. 63 on labour force participation rate. Let me show you these in a chart form. Not that one. Sorry. Where are they? Here we go. Right, payrolls. Couple of months in a row we've had payrolls quite strong. Interesting that we've seen 3 months in a row now of ADP strength. Payrolls have also been ahead of expectations. Bear in mind that ADP number that we got on Wednesday, 263, will that be another payrolls headline that is very strong? Possibly. Unemployment 4.7 tends to be the focus. The focus is a little bit more on the underemployment, the U6 data, 9.2. If that continues to fall back to 9%, I think that would be considered to be hawkish. Average hourly earnings as well, 0.2% last month, 0.2% is the expectation here. Can that hold up the average hourly earnings around about that 2.8% is the question. Because the average hourly earnings growth needs to be seen, I think, from the Fed to continue this tightening that they're going on. 63% on the participation rate. Now, participation rate has been improving in the last few months. If that goes above 63% again, that would be considered to be a strong number for the dollar, I think, this afternoon. So I think aside from the headline payrolls number, I think we've got a lot of data that the market will be focusing on this afternoon. But for now, just looking at the safe haven moves really, and reaction is just not on payrolls quite yet, but there is a mild safe haven shift. Certainly the yen outperformance against the dollar is the sort of significant showing of that, as is gold. So that takes me to my chart today, which is euro yen. Sorry. Euro yen has been falling away quite strongly actually. Look at this trend lower, almost a downtrend channel. But it's back towards this key uptrend, isn't it? This key uptrend that's been in place since June last year. Now that uptrend is being tested. The last few days have had fairly small-headed candles, which I've found quite interesting. You've now got also 9 completed bear candles in a row. Looks like a 10th today. In the wake of this yen strength, but this is coming with the RSI now at 28. This is historically stretched stuff. Back to the downtrend. I look at the hourly chart, and I don't necessarily think it's all that negatively configured. It has been negative earlier this week, but just sort of holding up again, really, on the RSI. Stochastics all not all that strongly bearish either. You've got this downtrend that's in place in the last sort of week or so. At the moment, as we speak, comes in around that 1820 mark. So you've got rallies that are being sold into, yes, but as I said on this daily chart, you've got these sort of series of candles on a closing basis that are quite small-headed candles, which would suggest a relative amount of uncertainty going on. You've got the little resistance that's coming in now at 118.20, which was that old key low, and sort of come in as a basis of resistance today. So that is a bit of a level to look out for, but it will be interesting to see if this uptrend, this key long-term uptrend, holds on the euro yen, because, as I said, the RSI is towards 30, or at and below 30, which seems to be an extreme position on this RSI. It very rarely gets below 30 before you start to see the sort of support coming back in. So it may be that the downside potential is limited in this move, and if it rings true what I said earlier in terms of sort of the geopolitical shocks tend to sort of unwind quite quickly, perhaps the yen strength may not be all that long lasting. So it'll be interesting to see how this one plays out in front with payrolls as well. If you strong payroll support, that would drive risk appetite positively and put the yen under pressure again. So I wish you good luck in your trading today, and I will speak to you later. Thank you.